This is Terrence Andre Banks with Information Age Financial Solutions coming to you from an article I read called The Black Gold Oil War. Comes from Crusher Street. Haven't visited his site in a while, but this article really stuck my attention because I've done videos in the past about the importance of oil, and oil is the lifeblood of any economy. And especially with COVID-19 and coronavirus just really taking its toll, or at least that's the narrative being presented. I wanted to know a little bit more because we heard the stock market crash because of oil a little bit, and this article goes in a little bit deeper detail about just a little bit more about crude production and oil as a whole. And the importance cannot be stressed enough because oil oil is the lifeblood of any industry and lifeblood of any economy. All sophisticated economies and all life really kind of runs around this particular natural resource. So I'm gonna dive right into the article. As always, I'm going to put a link inside the description. Since publishing a return to the black gold rush in January 2018, the USA achieved energy dominance by cementing its position as the world leader in oil reserves. It is a net oil exporter of crude and petroleum products for the first time in 7 years, and became the largest crude oil producer as Russia and Saudi Arabia fell behind. This is show a chart here. I love charts. On the heels of a coronavirus COVID-19 pandemic spreading across the planet, and severely affecting the global economy, Russia has launched one of the ugliest oil price wars in recent history. Saudi Arabia did not waste any time with a response, and several American oil companies will likely become victims in this high-stakes poker game. On Sunday, March 1st, Vladimir Putin said the oil price is roughly $45 per barrel at the time was sustainable for the Russian economy, and the country was prepared for any adverse effects the pandemic may have. He also noted that the OPEC is an effective mechanism for long-term stability in oil markets and that Russia had options on the table to mitigate any fall in oil prices, but emphasized that cuts in production would not revive demand in the current environment. Some analysts speculate that Russia's initial decision to not cut production when the global economy is struggling with a pandemic on its hands was designed to hurt U.S. shale producers in retaliation for the U.S. meddling in the politics of the Nord Stream gas pipeline from Russia to Germany. Interesting. Saudi Arabia fired back on Sunday, March 8th, by reducing the price it charges China for unrefined oil with a $7 per barrel discount and increased its unrefined output by as much as 12 million barrels per day into an already oversupplied international market. That supply hike is 25% higher than last month's reduction and put Saudi Aramco above its capacity. Moscow promptly responded with a boost in production by 500,000 barrels per day, which puts their production at roughly 11.8 million barrels per day and leaves them in record territory. When the oil market opened on Sunday evening, the price of oil plunged 30%. The consensus loser will be the U.S. oil patch, as the frackers are carrying huge amounts of debt, which will not be paid while prices sharply decline. That's why it's so important we pay attention to this. There will be talks about a credit crisis as banks and all other oil creditors will have to absorb losses and probably restrict lending to other borrowers. Those with private equity investments in the Bakken, Permian, and others will be taking inventory of how battered their portfolios will be. Recently, the Trump administration threatened the final leg of Nord Stream 2, which would have completed the European dependence on Russian energy exports. President Trump will have to make a decision whether the U.S. energy sector and some financial institutions are worth the sanctions and meddling in European energy affairs. Putin potentially can be even more destructive. Under Article 5, NATO is obligated to come to the aid of Turkey if tensions mount and a genuine conflict begins. In 1986, oil prices collapsed to $10 a barrel, and Vice President George H.W. Bush sent to Saudi Arabia to salvage the Texas oil patch by negotiating an end to the Saudi effort to destroy the U.S. oil business. Interesting piece of information here. How far will the oil prices collapse before the Trump administration realized the role of Russia in the U.S. economy? Euro Harris. Stocks and oil companies usually follow oil price movements. Even before an abrupt end to the Russian-Saudi romance, the price of oil and related equities were hit by depressed petroleum demand from a slowing and growing economy and evolving pandemic. The consumer may enjoy a lower price at the pump in the near term, but the overall impact from the 20% stock market plunge, a global economic slowdown, and fear of public places will likely force the consumer into hiding. The consumer is the last leg holding up the U.S. economy and is being threatened simultaneously on the numerous fronts. If the catfight at the OPEC Plus party is indicative of what is afoot, there are ugly days ahead in the oil patch, along with the overdue recession in the business cycle department. All right, here goes. There's federal aid for shale companies hit by an oil shock on West Downtown, Washington Post. Only 5 shell drivers are still profitable at $31 in oil. Tankers range such as traders hunt for ships to store cheap oil. Oil market crash exposed liquidity, drought, and corporate debt trading. U.S. goes after Iran's floating oil storage. The winner and losers of the Saudi-Russia oil price war. As recession fears mount, eyes turn to American consumer. It's interesting. All these different things have clickable links. Definitely encourage you to take advantage of and take a look at them. I've read this on myself. To view a larger version of the following charts, right-click on it and choose your image options. Light sweet crude oil monthly. Look at the trend line is going down, and so eventually it can get more expensive. Light sweet putting a low of $17.12 in October 2001, high of $147.27 in July 2008, low of $35.55 in February 2009, low of $26.05 in February 2016, high of $76.90 in October 2018, and print a low of $27.34 on March 9th, 2020. Lexus Test S Intermittent Futures Monthly Chart shows this here. Love charts, always gives a good visual. With a put in the low of $25.80 in April 2003, high of $147 in July 2008, low of $25.75 in February 2016, high of $77 in October 2018, and printed a low of $27.29 on March 9, 2020. Neither chart is bullish and prices may go lower. The timing and price point to take advantage of blood in the streets as the current economic condition is not an easy choice to make. Plan your trade and trade your plan. Roughnecks around. Let me hear this. What is this?
This one is for Ramon.
Video about the oil patch there, just to add on to it. Oil is something that we need to very well pay attention to, especially with everything else going on. I know there's so many things going on you have to be mindful of, but oil is a very precious resource that, again, our society as a whole and the world as a whole will not exist until we find all the alternatives. Right now, that's not currently being the case. If this video has been of value to you, please subscribe, leave some comments, and until my next video, I'm out.